Silver forecast. Why silver miners are breaking out before. Silver reprices. What if I told you silver hasn't failed? The stock market has. While most people are watching daily pullbacks in gold and silver prices, something far more important just happened beneath the surface. Quietly, structurally, and without headlines. A decade-long breakout has just occurred in silver and gold miners. Not against the dollar, but against the US stock market itself. This is not a bounce. This is not a trade. It is a regime shift, and historically, when this happens, silver does not move gently. It moves after disbelief breaks. Before we go any further, let me be clear about what this is and what it is not. This is not a price prediction video. This is not a call to buy mining stocks, and this is not a short-term signal. This is about capital behavior. Because markets do not turn when headlines announce them. They turn when money moves first. What you are looking at here is not a gold chart. It is not a silver chart. It is a relative performance chart. Gold and silver miners versus the S&P 500. It answers only one question. Is capital choosing financial assets or scarce monetary assets? For more than a decade, the answer was clear. Stocks dominated. Miners were ignored. Fiat confidence held. Until now. For roughly 11 years, miners were trapped in a tight compression zone relative to the stock market. That period coincided with central bank credibility, abundant liquidity, and the belief that we no longer needed gold or silver. That belief is now breaking. The XAU index, representing gold and silver miners, has decisively broken out against the S&P 500. This does not happen because of emotion. It happens because capital reallocates when confidence shifts. Miners do not lead because they are exciting. They lead because they are sensitive. They feel pressure first. They respond to physical tightness before narratives change. And institutional capital uses miners as an early proxy for scarcity exposure. In every major precious metals cycle, miners outperform before silver price accelerates. Price follows later, after disbelief collapses. That is the sequence. Now here is where this connects directly to silver. At the same time miners are breaking out, Shanghai silver continues to trade at persistent double-digit premiums. COMEX inventories are declining structurally. Silver is outperforming gold even during periods of dollar strength, and physical buyers are behaving as if availability matters more than price. That is not coincidence. That is stress transmission. It is capital responding to a market where the paper price no longer reflects reality. This is also where most people become confused. They see a pullback in gold, a dip in silver, and they assume the thesis has failed. But relative breakouts do not care about daily volatility. In fact, volatility is not a warning. It is the mechanism. When miners continue to outperform during pullbacks, it tells us something very specific. Selling pressure is being absorbed. Positioning is happening quietly, and the move is structural, not emotional. Most analysts will discover this later, after miners are already significantly higher, because relative charts are not popular, they do not fit headline narratives, and they do not sell clicks, until it is obvious. By the time you hear the phrase, silver miners are suddenly soaring, the early phase is already over. This breakout is not saying, buy miners today. It is saying something far more important. It is saying that the stock-centric worldview is cracking, that monetary assets are regaining relevance, and that confidence in financial assets is no longer expanding. Silver sits at the center of that transition. This reinforces everything we track here. Physical demand leads paper price, capital moves before stories, and repricing happens in gaps, not smooth trends. Miners breaking out against stocks is confirmation, not speculation. Going forward, this is what matters. Do miners continue to outperform on pullbacks? Does physical silver remain bid globally? Do COMEX inventories continue to drain? And does volatility expand rather than compress? If so, the repricing phase is not finished. It is just beginning. This is how regime shifts start, quietly, uncomfortably, before the crowd believes. Silver miners have just sent a message the stock market does not want to hear, and historically, silver price eventually delivers it. We will continue tracking the signal, each morning, right here.